Volatile day in the stock market, all in society. Let's break it down. We did have an Apple's earnings beat in the after hours, but not before Microsoft fell 10% today. Yep, shares fell 10% today. That's the largest drop since 2020. Now, before we get into it, make sure you read over disclaimer. I am not a financial professional by any means. Anything that you hear in this video is for educational and entertainment purposes only, and you should always do your own research. Again, I am not a professional, and this is not investing advice. All right, let's get right to it. All in society. Welcome, welcome, welcome. Let's go over today's news. And as always, I use Google Gemini to do just a brief summary of the biggest news in the market each day. All right, so like we said at the top of the show in the intro, Microsoft suffers historic 10% wipeout. I believe we'll look at the charts here in just a moment, but I believe it was just under a 10% loss today. So it actually pared back from its low. But Microsoft experienced its second largest single day loss in history today. Let me read that again. Its second largest single day loss in history, cratering approximately 10%. Despite beating on top and bottom line estimates, investors were spooked by slowing Azure cloud growth and a massive $625 billion backlog that is heavily concentrated in AI contracts rather than broad enterprise spend. That cloud, the Azure cloud, is very important for investors. They want to see a certain growth projection, and if it's below that, even if it's slightly below that, you'll find people running for the door, especially when Microsoft is continuing to spend an exuberant amount of money to build their AI infrastructure. So just keep that in mind. We got to pay attention to these numbers and make sure that they are exceeding the expectations, not just merely meeting them. And we want them to have forward guidance that is showing progress and not, again, kind of concentrating or falling behind. So how did that impact the market? Well, it wasn't a good impact to the market. It dragged the NASDAQ and S&P 500 lower for most of its session, sparking fears that the quote AI ROI, or return on investment, for software might be slowing down. It seems like the jury is in for a lot of software companies. A lot of them are getting their butt kicked so far this year. So that's something we'll have to keep our eyes on. Next up, Meta's AI monetization, proof of concept. So we talked about this in the last video. Make sure you check that out. If you enjoyed the video so far, please make sure you like, share, and subscribe. And we would love for you to join our Patreon if you are a trader or if you are a long-term investor and maybe you just want someone to trade with or someone just bounce ideas with. I would love to have you in the Patreon. The link is in this description. There's a free version and there's also a paid version. The paid version, it gives you a lot of my research, just like this, that I don't share for free. And also it just gives you my real-time trades when I enter a trade and I exit a trade and some of the ideas that I have even before I execute. So moving on. Countering the Microsoft's gloom, Meta skyrocketed about 10% today. The company proved that its heavy AI spending is actually working, delivering record ad revenue and high engagement via Llama 4 integration. So in the prior quarter, Meta was saying that they were going to continue to spend and ramp up spending. Investors did not like that, especially because they had this one-time charge that really dampened their report last quarter. But we didn't get that one-time charge this time, and we saw growth across the business, and that ad revenue is allowing Meta to continue to spend. And obviously investors liked it after shares getting kicked in the mouth for past 3-4 months. So how did it impact the market? Effectively, it saved the tech sector from a total collapse today, definitely providing a floor for other ad-heavy tech names like your Google and your Amazon. Google bounced back pretty strong today as well. Amazon, I don't think it bounced back as strong as a Google, and definitely not like Meta. I think a lot of folks didn't like that there was a report today that Amazon was going to invest billions of dollars in OpenAI. And I think that's another reason why Microsoft sold off, because it's partnership with OpenAI, and it seems like there's a lot of issues with OpenAI. Before we talk about Apple and SanDisk earnings, I wanted to go over gold because gold hit a new high today. It went parabolic. It hit all-time high of $5,600 an ounce this morning. Gold, or the GLD, which is the company that we invest in, or the how we invest in gold, the commodity, suffered a massive, quote, margin hike flush, tumbling back towards 5,170. It is still extremely oversold, and it's really been a V-shaped recovery. And we can look at the chart here in a second. It was bounced high, hit a new high, then it's immediately sold off. But throughout the day, it actually climbed back higher. So those of you who are in gold, congratulations, keep holding. This looks like it's going to be good. How to impact the market. The extreme volatility signaled a potential local top for the, quote, debasement trade, leading to a rotation out of commodities and back into hardware tech names that reported strong earnings. I'm not going to lie, I'm kind of hoping that happens again. I think gold is going to be a great play throughout the year, but it's not sustainable to be at these levels, and it's actually kind of unnerving for gold to be on a run like it is so far this year, or really for the past year. All right, let's go back to Apple, and then we'll hit SanDisk. So Apple's iPhone 17 super cycle beats expectations. Apple recorded Q1 revenue of $143.8 billion, driven by a massive 23% surge in iPhone Pro sales. The, quote, Siri Gemini AI integration has officially triggered the hardware upgrade cycle investors have been waiting for. I don't know about that part with Gemini because we haven't even seen this roll out yet. And that partnership was nice. We kind of already knew it. That information was already baked in, but it is we'll have to be patient and see what it's going to look like. Is it just going to be simply like, if you have a new iPhone, you can use OpenAI? Is it just going to be simply like that, or is there going to be a little bit more that's involved? It's going to be private and on Apple's private cloud, so that's another benefit as well. So how did it impact the market? Shares jumped 3% in after hours trading. I think it's well off that. It's probably maybe up 0.5%. They finally positioning the stock to challenge the critical $280 resistance level we have been tracking. And we, as in myself, have been watching Apple. I'm a long-term investor and a long-term believer. But a lot of the questions about Apple during the earnings call was about the memory cost. A lot of their business and a lot of their tech involves memory, and those memories like your Micron or your SanDisk, like we're about to discuss here in a second, there's a shortage, and that means they have pricing power, and they are probably gouging prices and taking advantage of that opportunity, and that might cut into some of these companies like your Apple, your Amazon, and even your Google's margins. So just something to be mindful of. We can be bullish on Google. Google's had a nice run, but you need to hear what Google has to say during their earnings call, whether or not these memory costs are going to eat into their margins. And that might temper some of the analysts' expectations for the stock for the rest of the year. So just keep that in the back of your head. And then that's how we move on to SanDisk. They had a blowout quarter, and they titled this SanDisk Blowout, the Move to AI Storage. So SanDisk delivered a, quote, shocker of a quarter with revenue up 61% year over year. That's awesome. The blowout was driven by data center demand. As large language models grow, the need for massive enterprise SSD storage is exploding. And how did this impact the market? Again, this is an after hours, but SanDisk shares surged 15%. I think last time I looked was around 14, 15% in after hours, acting as a major tailwind for semiconductor sector and lifting TSM and NVIDIA in sympathy. I did see when I was looking earlier that it said NVIDIA hit like $200 in after hours. I didn't see that myself. And even if it did spike up there, it sold off immediately because that is definitely not where it is right now. But hopefully SanDisk continues to ride higher and we kind of get a move, what we did today with Meta minus the Microsoft tearing the market down, and maybe we can hit close to go into the weekend with all-time highs of the S&P 500 and the NASDAQ, and maybe the Dow will even come along as well. But those are the major stories for the day. I did want to come over here because I wanted to know who are SanDisk's biggest customers because they had that blowout quarter. And I wanted to know that because some of those companies that you might be invested in, your Amazon, your Microsoft, your Googles, their margins may be affected. They're impacted. So the big three hyperscalers, and I just asked Gemini, who are SanDisk's biggest customers? They had a blowout quarter, and it explains about the quarter, and then it says, as far as the hyperscalers, this is where the quote blowout numbers are coming from. SanDisk Stargate SSD line is currently being qualified or used by 5 major hyperscalers. 1, Amazon, the largest cloud customer. AWS is aggressively moving away from traditional hard drives to SanDisk high-capacity enterprise SSDs to reduce power consumption in AI training clusters. Something to keep your mind on when we're thinking about Amazon's earnings for the remainder of the year. Now, this upcoming earnings report, we're probably going to be all right, but how is that going to affect the orders for 2020 or the numbers for 2026? Microsoft, they're utilizing SanDisk's, says BICS8 NAND for the massive data lakes required to power, quote, Copilot and OpenAI integrations. And also Google is a major buyer for their big data analytic tiers. So again, Amazon and Google, their earnings are coming here pretty soon. I think these quarters were the quarter that just passed. We might be all right, but heading into 2026, as long as there's a supply shortage in memory and the companies like your Micron and your SanDisk have pricing power, we have to be mindful of how this could be affecting the margins going forward. And then also, I just wanted to highlight Apple as well, because Apple talked about it, as I said, during their earnings call. Tim Cook explained it a little bit, but he didn't explain it in a way that he didn't give away too much information. He didn't want to kind of lead people maybe the wrong way or give too much information, but I didn't leave that earnings report outside of the numbers with too much confidence, to be quite honest with you. And I think that's probably why after the earnings beat, we didn't have a bigger run up on the stock after hours. Plus, the PE ratio, the valuation of Apple is towards its high end right now. So it's just something else to be mindful of. All right, let's look at the market a little bit further. We see S&P 500, like I said, at pretty much a V-shaped recovery. It was down today $1.50, but closed just under 0.13%, so not bad whatsoever. NASDAQ had a really nasty day. At one point, it was down 2.6%, but it closed less than 1%, 0.72% down. So it was nice to see that bounce. And then Dow had a positive day. It closed up 0.11%. Something to keep in mind of S&P 500 all-time high at 7,002, and today we closed S&P 500 6,969. And NASDAQ's all-time high is 24,019. We're at 23,685. So just be mindful of those levels. When we get those levels, we're probably going to get some type of sell-off. Look at SanDisk because it was on the top of my head. We just discussed it. Shares are up. I don't know if you guys can see it. No, you guys can't see it. It's over here. They used to have it over here, but I guess Yahoo had a update. They used to have it right under here. But after hours, to say it's still up 15%, trading around 621 bucks, which would be well above a new 52-week high. Their 52-week high previously was $546.75. So it blew that out the water. Just something off the top of my mind. If we look at SanDisk, let's look at Micron as well. Yep, those shares are up 3% in after hours as well, hitting a new high. It said TSM and NVIDIA, there was a boost because of SanDisk, but I'm not seeing that currently right now. For whatever reason, it won't let me look at what the after hours movement was. I know sometimes I can do it on my phone, but doesn't look like that's the case. All right, looking into some individual companies. Here we go. Gold is spiking again in the after hours above $500, 594 cents, up 1% in after hours. We'll see if it's going to go right back to that 509 again, or if it's going to, what's it going to do? We will see. Meta closed today up 10%. But it is down in after hours. Probably no big deal. It's a little bit of profit taking. But it was up in after hours, I think, after the earnings report last night, up around 12%. So it was good. It pretty much held that. So that was good to see. NVIDIA had a positive day and Google had a positive day today. So that was good after the shares were started out positive but closed negative. NVIDIA was up 0.52%, just over 0.5%, closed at 192.51. And Google up 0.67% for the day, closed at 338.25. I do like the setup for Google on the charts, on the technicals. Just some free game if you're watching this far. We'll see where that goes, though. Scrolling down a little bit more, is there anything else here that I wanted to highlight? Uber bounced back. That was good to see. Shares were trading below 80. I think anytime Tesla has any type of momentum, Uber likes to sell off. I'm not sure exactly why. I mean, I get it, but I don't think Tesla is going to disrupt Uber, and if it does anytime soon. Elon is very optimistic about his rollouts and how things are going to come to fruition, and his timelines are typically not accurate. I'm not a Tesla guy. I think Tesla, the stock, is nothing but a meme stock, to be quite honest with you. His valuation is pretty ridiculous. But a lot of people believe in him. I understand why, but just be careful when you're investing in that company. I know a lot of people made money and they've been making money off of it for a while, but I made a little bit too, but just be careful. Robinhood, there was some information about, I don't want to misspeak. I'm going to do a little bit more research and I'll get back to you guys, but there was a little bit more information about whether or not, I think maybe if I could put it in layman's terms, whether or not it's going to be legally, if Robinhood, Kalshi's, and companies like that are going to be able to continue to trade sports under that business, because that's essentially, it's just gambling. It's sports betting. It's not event contracts. I understand you want to trade on politics and things like that, but it's gambling. It's not, you can call it what it, you can, what do they say? Something about something on a pig and it's still a pig, whatever that saying is. It's still gambling. You're letting people gamble. You can call it event contracts or predictions, whatever you want to call it. It is gambling. So I don't think, I don't know. We'll see. I'm a DraftKings investor. DraftKings been getting kicked in the mouth because of Kalshi and the Poly market and all of these prediction markets. But DraftKings and FanDuel as well have introduced their own prediction markets. To be honest, quite honest with you, all I think this is going to be a catalyst, because your Kalshi, Robinhoods, you're able to bet in sports and it's not regulated by the state. It's on the federal level. Well, the states that are regulated, online gambling is regulated, they're allowed to get tax revenue from that. Well, for the states that are not regulated, you're still allowing people to bet, and I believe it's not as safe. It doesn't have all the guardrails and things like your FanDuel, your DraftKings, and all the other sports books have. It's a little bit more dangerous. And also, you hear a lot of stuff that's going on with, people throwing games or doing stuff that they're not supposed to, as far as athletes to get a little bit of money, but they're getting caught and getting hemmed up. So I just think this is going to a place where these, like Kalshi and these other companies, they're going to be eventually, someone's going to say, all right, enough is enough. Or what's going to happen is the courts allow this to continue to go on. And a lot of those states like Texas and California, they're like, listen, these folks are already betting in our states because of the federal laws, but let's get this tax revenue, and let's regulate online sports betting or online betting, whatever you want to call it. And I think that is going to be very beneficial, and it's going to be a tailwind for your DraftKings and your FanDuel. So I have a long-term perspective on that. I'm willing to take a little bit of losses right now, but remember this conversation. DraftKings, FanDuel, they will win at the end of the day. Netflix down today. Robinhood was down, but looks like in after hours it propped back up. And that is pretty much it for the day. We'll see how the market closes this Friday. If you're in the South and you're dealing with this wintry weather, be careful out there. It looks like things aren't going to get much better. Colder temperatures are coming this weekend. I think Monday or Tuesday is supposed to warm up, but then we're supposed to get some more showers and stuff later next week. So y'all be safe out there. If you enjoyed this video, make sure you like, make sure you share, make sure you subscribe. If you watch it to the end, make sure you subscribe, tune in, make sure you follow me on socials, and I'll see you guys next time.